Good morning, everybody. It is Tuesday, April 15th, and we are going to get started with our prep today for the ES and the NASDAQ for you. We do have some new tools to show, which we'll be going over first. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, to dive into some of our new tools that we have, and we will be making available in time for our professional subscribers. Our students get access to the full suite of tools that we have for both our website and for Sierra Chart, but will be making some of these available to our professional subscribers. We can see here, looking at our expected range, and we look at this both daily and intraday. And so intraday, we can get a little better zoom in and show you we are looking for rotational price action from 5260 up to 5500 with the midpoint here around 5400. So around yesterday's low is where our midpoint is. We also want to look at our range, and our range is beginning to consolidate. So we had a bigger range expansion, and now we are getting that consolidation of the range. And then we want to check the positioning. So on the 0-day options, we are in a positive gamma environment, and the top end of our expected range today also lines up with where the shortest term momentum traders will be selling. If we look, because this week is options expiration, we are in a negative gamma environment. So we are going to get this push and pull. And our overall line in the sand is above that, which we watch. But we are looking again that even if we make a move up to our upper band today, to our top level that we have, which is up here at so if we look at our upper band there, 55.91, that's our top expectation, which is about a 3% up move. We would still not get to the gamma area that would change market makers. So that is something we want to be aware of because that tells us what is likely to persist. So while we are consolidating our range and our price, and we are eventually going to look for that breakout of this wind up rubber band, we are limited on that upside. And then the downside, therefore, has a little bit bigger of a range for us to get down to. And if we look, what we look for when we look at our ranges, you can see when we get to that upper band, we look for sell off. So conversely, same thing when we get to that lower band, we look for areas to push us higher. And these are, again, our proprietary indicators, but we are always looking for the edges in the market and then aligning that with the price action and some other factors. So if we look a little bit lower, we can see that the 53.95 is going to be a key area today. So on the SPX, so 54.26 to 31, that is going to be a major pivot for you today. If we get below that, then our next major area is 53.91 to 53.86. And below that, 53.41 to 53.36 is where our market makers have their last bid. And then we do have some key areas at 53.76 and 54.56. And if we happen to get over 54.81, then it'll be more of a clear shot up to 55.06. When we look at our overall structure, again, we are still very risk off right now, and that is going to perpetuate these wider ranges. So don't expect volatility to come down anytime soon at this moment. And then when we look at our short-term structure, we look at our catalysts, and the major catalyst this week is going to be retail sales, as well as Powell speaking tomorrow. And so we will look for this to get bid up, which will put that downward pressure in the markets. And so we want to be very aware of where these turning points are, going back to our levels and watching that rotational zone for any kind of breakouts. If we get to the top of that rotational zone, we will look for resistance. If we get outside of that, then we can start targeting that upper edge of our zone. Now, before we get to the NASDAQ, let's take a look at our positioning. And commercials did go net long onto the SPX last week. So now we have a shift coming in the market as they are buying as everybody else is selling. And we are still seeing a long VIX position. So that also tells us they are protecting this long position. Other signals that are developing, gold, oil is giving a signal as well. And then we have SRW and the yen giving us all clear signals. And we go over those with our students, as well as how to build plans for all these instruments. If we look at overall here, when our commercials do go um, first go to net long, we have a position they are building that they want to sell, but then they will sell that back down. And we've seen that happen time and again. And same thing happened here when we first went long. We saw the push, and then they look for something to sell into. They create that up move to sell into, and so that's what we've been seeing recently is this first move up, and that's what we had off the lows last week is a move up, and then we will look for a little bit of selling to come in, and then unless we get over our overall line in the sand, which is at 56.91, nothing really changes in the market. And if we look at overall just volatility in the market. So in terms of our options volatility, we are getting signals that we are near a short-term peak. Anytime we've gotten down to this -10 level is when we're nearing a short-term peak, and then we see a sell-off come. That's what we're going to watch for again here is anytime we get near that short-term top, we are looking for maybe small continuation, but then a more significant down move coming, and that's the kind of environment we're in now. We also pay attention to bond volatility because the bond auctions do matter and they trickle through to the dollar and they also trickle through to then our equities. And we are seeing a breakout on the MOVE index and on the TLT and increase in volatility, which we are seeing across the board. All volatilities have been increasing since April of last year. And really since August of last year, when we had the August 5th day, volatility started getting repriced higher. And we are still seeing that perpetuate again. And then if we look at our credit risk, we are finally getting, and this is not a healthy signal, but we are getting that breakout on our high yield volatility. And the last time this happened was 2022, which increases that default risk for smaller cap companies, and credit and lending is what we're really focused on here. And this kept the market in a bear market. And then even in 2023, we basically just got back to where 2022 was. It wasn't until that risk gets taken out of the market that we rallied. The same thing happened in COVID. Once that risk got taken out, then we rallied after COVID in the latter part of the year, the second half. We are getting that credit risk to come back. So this is something we're also paying attention to overall. And as we look into our trading, we always check our correlations and what instruments we can look at and use and are aligning and trying to find over duration what those key turning points are. And so when we look, the VIX has been inverse to the S&P. So as the VIX has moved up, the S&P has moved down. The dollar has been moving in line recently. It's starting to break that, but we do want to pay attention because as the dollar gets weaker, typically we would see equities rally as that makes exports more beneficial. Companies like Apple and multinational companies, Microsoft, Tesla, Nvidia that sell across the world, their products become a little cheaper. But with tariffs and the trade war starting to battle, we really want to watch that because if the dollar breaks down, that could send equities higher, but with higher tariffs and then therefore higher prices overall, it's going to change that equation in ways that we haven't typically seen. So that's what we're paying attention to over multiple assets. Now, same thing here that we went through on our SPX, we can look at for the NASDAQ, and you can see that our shortest term momentum is at 18,602, and that is right at our lower rotational edge. And then we can watch upwards to 19,000. 19,100, and that's our upper rotational zone. And we can really drill down here. If we turn off VWAP, again, we can see where everything kind of aligns and find those confluence points. But we can see our rotational zone goes up to this 19,300 area on the NASDAQ today. So we do have about 1,000 points of rotational range that we could see. And if we get outside of that, then we can look for more of a trend. But very similar, we look for If we get up to that upper edge, we would look for a sell. If we get down to that lower edge, we'd look for buy signals, as we would see that the market has hit its expected moves, unless the only thing that changes this is if volatility changes. So if we see the vol of vol changing on the Vixen or the VIX itself, then we will see these ranges expand to the downside or to the upside if it contracts, and then we can look for more trending moves. And that's what we're going to watch here on the NASDAQ today. So 18,300 is going to be our major lower level to watch, with 18,841 is our pivot. And then at that upper end, it's at 19,325. And then if we do make a break higher, we really look to run into resistance around that 19,400, 19,350 to 400. So where our upper rotational is, we also have our shortest term momentum market makers will step in for a sell there. And so this is what we're going to watch on the markets today. And if you guys have any questions, please feel free to post them in our room. And have a great day. And be sure to control your risk in this higher risk environment. That's the only thing that we do control. We can't guarantee wins. We can't. The only thing we can guarantee is how much we're willing to lose. And if we protect our risk, we can win in this game. So be sure to control that as we move forward this week. And have a great day and great week, everybody.